Hello and welcome to Chemspec Digital 2021. I have the pleasure to introduce the first presentation in the Agrochemical Lecture Theatre. However, before I do, please note that we are recording this presentation to make it available to view on demand. Attendees are invited to write questions into the chat function from where we will read them out at the end. And now I will hand to Darren Stobbart of IHS Markit Corp Science, who will be presenting a global crop protection industry market overview. Over to you, Darren.
Good morning, everyone, and thank you, Imran, for the introduction. I'd just also like to say thanks to Chemspec Digital for inviting me here to speak to you all today. So as mentioned in the introduction, our agenda today will be to provide an outlook for the 2020 market, just to give some a baseline to what will be discussed later in the slides, before we move on to the 2021 preliminary estimates for the global crop protection market. And then we'll start to look a bit further ahead towards 2025. While we're doing so, we'll bring in and discuss some of the key metrics and drivers within the industry, and those drivers which we use to base our global market estimates on. We'll also cover some of the key parallel sectors which support the ongoing trend of environmental, social and sustainability and governance, or ESG, and these key segments being the biological market as well as digital farming. Now, the slides that we're going to present should last around 30 to 35 minutes. So we will leave some time towards the end for 10, 15 minutes where we can go through any questions that any of you may have today. So first off, we'll skim over fairly quickly what our 2020 baseline review is. This is intended to provide a backdrop towards what we're going to discuss later in the slides. So from a top level perspective, the global agrochemical market was estimated to increase by 2.5% in 2020, achieving a total of almost $70 billion US. Of this total, the crop protection market was estimated to increase by 2.7% to around $62 billion US. And the rest of the market is made up by the non-crop agrochemical segment. So this includes sectors such as turf and amenities, indoor household pesticides, and professional pest control operators, and so on. And this segment grew more modestly, rising by a marginal 0.6% to approximately $7.85 billion US. Now, for the purpose of the analysis that we present, we're going to be looking at the crop sector. That's where IHS Markit Crop Sciences expertise lies. And the key product groups are listed here at the right-hand side. So insecticides, fungicides, others, and herbicides, namely being the key sectors that we follow. So in 2020, herbicides dominated the market, rising by an estimated 2.9% to $27.4 billion US. Now, it's worth pointing out that all our data are ex-manufacturer level and reflect the value of products actually used on the ground. So excluding the inclusion of retail and distribution margins. For herbicides, it's also worth pointing out that this is the value of the actual agrochemical products, and it does not include the value of the GM traits that a lot of these herbicides are associated to. Following herbicides was fungicides, the second largest sector from a product perspective. And we estimated that the market increased by 2.4% to $16.8 billion US. Now, it's worth pointing out that for both fungicides and insecticides, this includes biological products as well as the conventional market. And although the name fungicide might suggest just fungal pathogens are controlled, this also includes the value of products used for viral control, as well as bacterial control. Similarly for insecticides, this includes products for use in nematicides and acaricides. And the segment was estimated to increase by 3.1% during 2020 to 15.7 billion US dollars. Now, the remainder of the crop market is made up of the combined category that we define as others. And this includes products such as plant growth regulators or insect mating disruptors and other pheromones, as well as fumigants. And we estimate that this market is approximately 2.1 billion in value. Now, to look at the market from the geographic perspective, this map here shows that it was a strong year for all regional markets, with each experiencing year-on-year growth. The map also displays the top 20 countries from a crop protection value perspective. And as we can see down in Latin America, despite some currency headwinds, Brazil, who is the #1 market with a value of around 11.3 billion US dollars, achieved growth. And again, despite the impact of the strong devaluation of the Brazilian real. Of the top 20 country markets, we estimate that India had the most solid growth, rising by 8.8% during the year. And this growth was on the back of a favourable monsoon season. And there was also the impact of coronavirus, which actually boosted the market. So based on a lot of reports which we've seen, the availability of migrant labour was limited in the country. And this meant that farmers had to go to chemical alternatives, such as herbicides, as opposed to the hand field work, which is often done in key parts of the country. Now, to look at a more detrimental side of the market, of the top 20 countries that we track, the country which experienced most significant decline year on year in 2020 was Australia. And we estimate that the market declined by 6.2% as a result of the severe drought which happened in the country during the 2019-2020 crop season. So significantly impacting some of the winter crops down there. As we move into 2020-2021 season, we do see that the weather has changed, far more favourable. So we do expect some significant growth in the current year. Now, the last slide looking at the 2020 market just gives our perspective on the market from the crop application point of view. So in 2020, the conglomerate fruit and vegetable market was most significant at around 25% market share. And this was followed by the major row crops of cereals at 16%, soybean at 15%, and maize at 11%. But you can see here the various different crop categories that we track within IHS Markit. So as promised, we'll now move away from last year and we'll start to present our latest analysis of the current year. Now, all the figures contained here are preliminary and they'll be subject to change as the year goes on, as more information becomes available. So to any of our clients that are viewing now, the figures will be confirmed in the first quarter of 2022. So before providing actual figures, actual estimates and forecasts, which will come later in the slides, we'll go through each of the major drivers, the major market values that we take into consideration when making our values. Now, the first one, the most basic fundamental within the agriculture and the crop protection sector, is crop commodity price and the resulting impact on areas. So the basic equilibrium is when crop prices are high and acreages will follow suit for those particular crops. So as we came into 2020, we've seen a decline from peaks for most of the crops in 2018. And then the pandemic hit, and this changed the market in a number of ways. For cotton, which seen a significant growth, the 2020 season, there was reduced acreages as there was lower demand in the textiles industry. This had the knock-on effect of reducing stocks, and hence as we move into 2021, the price has increased, as has acreages. For corn or maize, as the pandemic hit, there was a bit of an impact from reduced biofuel demand. But as we moved through 2020, as economies started to reopen, and from when the Chinese herds of hogs started to recover following the African swine flu, we have seen growing demand for the crop. This is similar for soybeans, with increasing demand from the Far East driving demand. As for wheat, rainy conditions in Russia during 2020 limited the output of the crop. And as a result, global stocks declined, and so the price has increased significantly during 2021. Overall, when we consider all these crops combined, the acreage in 2021 has increased by 2.5%, which is a positive driver within the market. Now, one of the key fundamentals which boosts or declines acreage is the crop price. On the other hand, one of the things that benefits output will be the weather during that year. And as we can see from this map here, the conditions during the year up until August were generally favourable. Albeit, yes, there was some drought in the Pacific Northwest, which impacted northwestern US states and Canada. And yes, there was some dry conditions in Brazil and Russia. But over the whole, the market is looking favourable for 2021 from a weather perspective. Key areas such as Australia, as we talked about before, have been experiencing exceptional weather. Rainfall has returned following the impact of severe drought in 2018, 2019, and then into 2020. So this again is a positive influence on the global crop protection market. Now, to tie in one of the key drivers through weather, weather has a key impact on pest pressure. And in 2020, two of the key pest problems that we've seen in the market was fall armyworm, with the spread from the Horn of Africa into the Middle East, into Asia, and more recently into Australia, as well as the locust plagues, which have impacted production initially in, again, the Horn of Africa, before moving into the Middle East. So both of these crop pests have had a similar migratory pattern. Moving back to fall armyworm, it's such a significant problem that the Food and Agricultural Organization has designated around $500 million in an attempt to fight it. And one of the main problems which has been coming from this pest is the growing instance of some resistance to existing insecticide technologies. One thing going forward, which might be spurred by this, is innovation. So new molecules will be coming to market designated towards the control of such pests. Now, aside from just the pest pressures themselves, the resistance is a growing concern, not only for fall armyworm, but also for key weeds to glyphosate and other herbicides, as well as soybean rust has also been showing some resistance to conventional and existing fungicide technologies. So again, innovation will be spurred by such resistance going forward. So another key factor that we take into consideration when making our global market estimates is global trade dynamics. And as we see on this chart, although it's not a 95% p-value correlation, we do see from our historic analyses that there's a strong correlation between the price of Chinese generics and the global market. So as we can see, perhaps around 46, 47% of the change within the global market value can be attributed to the price of exports. So this chart here not only shows bars for our global market estimates, but also overlays the Chinese price of generic exports based on IHS Markit's global trade analysis database. So one thing that's worth pointing out is in 2020, we did see a rise in volumes for Chinese exports, despite the fact that for the first 2 months, as the pandemic built up, as the epidemic at the time raged, we did see some hurdles. Volumes decreased in January, February, but as we moved into March, it meant that there was more for the full year. The Chinese trade situation recovered. Now, as we move into 2021, we can see here that another positive factor is the price has increased. There's a number of factors for this, some being increased raw material prices, which has had a significant impact on the glyphosate price in particular. I think the latest report from the CCPIA shows that the price of glyphosate in August increased by 120% over the same period in 2020. So the increased pricing environment is another positive contributor towards the 2020 global crop protection market. Now, we've talked before in the geographic map that one of the key impacts to the market, particularly in Brazil, which is the #1 market from a value perspective, one of the key factors is the devaluation of the currency. And as we've seen in this chart, which is baseline to January 2021, the Brazilian real has depreciated at a significant rate against the US dollar. A number of currencies have, but it's been far more significant for the Brazilian currency. Now, although this does have negative impacts along the wider economy, one favourable side to this that a lot of our insight has found is because farmers are usually selling their soybeans to international markets on the export market, more often than not, it's quoted in US dollars. And so this has the knock-on effect of boosting farmer income, boosting profitability, and hence has the knock-on effect of meaning farmers have greater capital in order to spend on more advanced chemistries and technologies, which can be a positive factor on the sector. Another key trend which we've seen in recent years has been the ever increasingly strict regulatory environment. Now, the list presented here is not comprehensive. It's not every ban which has happened since January 2019. However, it does help to just identify and highlight some of the key molecules that have been banned in some of the key countries where the regulatory environment is becoming increasingly strict. Now, the molecules that are discussed here, it's not all necessarily bans, but it also includes phase-out periods and where the approval has been withdrawn. So as we can see, the EU, as we all know, has been one of the most strict regulatory systems in the crop protection market. And since January 2019, there's been 6 herbicides, including glyphosate, have either been banned or are undergoing phase-out. 15 insecticides, notably the neonicotinoid products, and 10 fungicides are also undergoing regulatory stress. In the US, there's been chlorpyrifos and dicamba, two main molecules which have experienced regulatory concern. Chlorpyrifos making the news just now because of the suggested link between the molecule and neurological impacts in children. And then there was a dicamba spray drift issue. In Canada, similar, there's been 7 insecticides facing regulatory scrutiny. And in India, last year, there was the proposed ban on 27 molecules, including chlorpyrifos, carbofuran, and mancozeb. So taking all this into consideration, it's actually around 40% of the top 20 molecules from a value perspective within the global market have faced some regulatory scrutiny in recent years, with glyphosate, mancozeb, imidacloprid, 2,4-D, atrazine, paraquat, chlorpyrifos, and epoxiconazole being those of the 40%. So one of the last key values, or the key drivers which we'll talk about today, is the company performance. So how have the leading players within our industry performed in the first 6 months calendar of 2021? So taking all these companies together combined, sales were significant, double-digit growth. We estimate that the combined sales were 15.1% over the previous year when measured in US dollar terms. Now, some of the key drivers for the company sales has been the improved weather in key country markets. There's also been some currency tailwinds, particularly with the euro, as identified here with Bayer and BASF. So that has been a notable driver. There's also been somewhat of a strengthening of the Brazilian real, so some positive contribution from the real in the second quarter of 2021, which is benefiting the Latin American market. Now, as we can see here, all of the companies have experienced double-digit growth, with the exception of FMC. With Q1 sales, growth in Q1 sales growth in Q2 sales offsetting more difficult, challenging conditions in Q1, where there was reduced volumes, lower pricing environment for the company, and these were somewhat offset by some currency tailwinds. Now, although the companies listed here have grown by double digits, because of some declines and more challenging conditions due to the pandemic in the first half of 2020, we expect this to largely just be a rebound for the major players and not necessarily directly comparable to the global industry, as we'll touch on in the following slide. So overall, in 2021, IHS Markit Crop Science estimates that the market will increase by 3.7% and will reach a total of $64.3 billion US dollars. This is boosted by the herbicide market, which we expect to grow by 4.5%. And again, this is largely due to the price of Chinese genetics. We'll look at glyphosate price increasing by 120% over the August last year. So these factors are significant for the global sector. Fungicides are also expected to grow strongly, up by 3.6% to 17.4 billion. And then thirdly, of the major segments, insecticides are expected to grow by 2.3% to 16 billion in 2021. Now, of all the metrics that we've used to discuss the 2021 market, we're also able to use forecasts, proprietary forecasts from IHS Markit to project such inputs further ahead. And as a result of this, we expect the 2022 market to increase based on the current insight by 2.6% to around 66 billion US dollars. Similarly, using the same metrics further ahead, we expect the global crop protection market to reach a total of almost 70 billion in 2025, which if achieved would result in 2.3% compound annual growth rate for each year in between. So moving away from the HIFO, the product sector, we've got a slide in here just showing what the regional possibilities are. We've not quantified these at this early stage. However, we're able to give rough rankings based on the trends that we've seen for 2021. So by the end of 2021, we expect the Asia Pacific market to increase most significantly, benefiting from some currency tailwinds as well as favourable weather in key country markets, particularly India and Australia, as we've discussed before. Now, Europe has been a bit stagnant in recent years. The regulatory situation, the weather impacts have all been a negative impact on the market. But coming into 2021, the analysts here are far more bullish regarding the region. And because of the currency tailwinds, sorry, I see there's a typo in here, the currency tailwinds are actually boosting the market, as we've seen for Bayer and BASF in the previous slides. There's also been favourable acreages and yields for key crops such as cereals and oilseed rape. Although some of the growth will be limited by floods in Germany, drought in other regions, and we did see some severe forest fires around the Mediterranean and Greece. Now, the Americas, we expect to be the least significant from a growth point of view, showing far more modest year-on-year change compared to Asia Pacific and Europe. North America will benefit from expanded acreages in the US and Canada, as well as favourable yield prospects, with the exception of the Pacific Northwest, where we have seen the severe drought. And in Latin America, favourable conditions in the 2020-2021 season in Brazil for corn and soybean has been offset by drought in Argentina, as well as the significant currency headwinds against the Brazilian real. So moving on from our market estimates, we've got a few slides in here at the end, which are intended just to give an overview of the key sectors which are conscious of the ESG movement. So ESG is essentially a successor to corporate social responsibility, and it's an evaluation of a company's conscientiousness for social and environmental factors. And as we are seeing, investors are increasingly applying such factors as part of their analysis to identify risk and growth opportunities. And so going forward, it's going to be an increasingly important factor. So just to put it into context, ESG covers a huge range of issues, and this is reflected on the widely differing approaches of different companies and the different ways that companies are able to boost their ESG scores. Some of the key areas are listed here by the Sustainability Accounting Standards Board. And key ones that are relevant to the inputs industry and crop protection will include greenhouse gas emissions, water and wastewater management, as well as the impact of such activities on ecology and biodiversity. So what are the main drivers within agriculture for increasing sustainability? There's the environmental awareness, regulatory requirements, agricultural policy, and technological advances. And what are the key strategies and what are the key parallel sectors that a lot of companies are investing in which are able to promote sustainability? Two of the key ones which we're going to discuss further are biologicals and digital agriculture. A third key area, which we won't have time to get into today, it's probably a 30-minute presentation in itself, is the topic of carbon farming. So this can involve strategies such as regenerative agriculture and reduced no-tillage production, as well as cover crop production in between key cash crops. And then there's also the carbon markets associated with the Kyoto Protocol that was signed in recent years. So this slide here gives an overview of the biological market performance from IHS Markit's point of view. And biopesticides, including fermentation products, currently are around 5% market share of the global market. And they're estimated at 3.4 billion in 2020. Now, all segments have generally outperformed the global industry, rising by 5.9% in real terms since 2015. And like I mentioned before, we estimate the market at 3.4 billion. But across the industry, there's a wide range of estimates, some as high as $5 billion US, which we consider to be a significant overestimate. Now, the biological market is also facing some competition from alternative technologies, such as RNAi, CRISPR, and other gene editing technologies, precision application, new novel conventional chemistries, which have been deemed to have a more environmentally friendly footprint. And because of such competition, as well as the dominance of the conventional sector, we do not expect that the market for biologicals will exceed 15% market share in the longer term, so beyond 2030. And the last point on this slide is just to show that the market is highly fragmented with a vast number of companies active, the majority of which turning over sales of less than 10 million US, and very few gaining 100 million plus in sales. So again, this is just a summary slide just to recap some of the positive drivers, some of the negative impacts or the limiting factors on the global biological market. But overall, the positives outweigh the negatives. And looking ahead to 2025, IHS Markit estimate that the biological sector will increase by around 7% per annum ahead to 2025, benefiting from the ESG movement, increasing adoption of organic farming, and so on. And we can see a number of inputs on this page. So moving on to digital agriculture. Digital agriculture comes in many different forms. We've got the input machinery, whereby variable rate application is available, variable rate seed planting is available, into the fertilizer, into the farm management software, whereby farmers have got a better idea of the logistics of their farm, of the capacities, the output, the yield of the farm. And then there's also the field monitoring through things like remote sensing. So the application of drones in order to either spray crops or in order to use multispectral cameras in order to get a better idea of their field health. So digital agriculture, precision agriculture, it comes under a number of names, and there's a wide range of inputs into this sector. And digital agriculture itself has been around for decades, but in recent years, the investments into the sector have been growing strongly. And in 2020, we did see that there was 1.3 billion in investments towards the digital agriculture sector, according to AgFunder. And this reflects an 18% rise over the previous year. And indeed, there's a number of companies that are active within the sector, within investing in the sector, from the major crop protection seed companies themselves, into the major fertilizer companies, machinery manufacturers, IT companies, and we can see a whole list of companies listed here. And then lastly, just an overall summary of the digital farming sector. So Bayer, in terms of paid acres, are the leader through the climate core business that was acquired by Monsanto, and then Bayer themselves, of course, acquired Monsanto. Similar to the biological sector, there's many companies that are involved, all the way from the multinational corporations down to the smaller agrochemical players and startup businesses. Now, our general opinion of digital agriculture from the agrochemical standpoint is that it's not a large revenue generator. And this is because a lot of companies are aiming to use these tech platforms, these technologies at a relatively low cost in order to provide farmers with a combined, complete agricultural suite of solutions. And there's a number of different approaches, reflects the complexity of the sector. And there's very different benefits from developed markets to more developing sectors. So the scale of economies in areas such as the US Midwest, there's different benefits to digital farming compared to smallholder farmings in the developed world. Now, apologies that ran on a few minutes later, but we still have around 10 minutes in order to answer any of your questions. So I'd welcome if there's any to come in. Thanks for your time.
Change impact the global crop protection market?
Yeah, that's a good question. It's one that we've yet to quantify the impact, but there is a number of different areas where we do see the climate change impact agriculture. The first impact is clearly we're seeing an increasing number and increasing severity of weather events, be that storms like stronger hurricanes, typhoons, and cyclones, be that flooding like we've seen in Europe this year and China, be that the fires that have been raging in the US and across the Mediterranean. So this clearly has the impact to reduce potential agricultural output. And as a result, global food security is clearly at risk. And this is especially true with the growing populations. It's especially true with in the developing markets, so such as sub-Saharan Africa. Any further impact to food security will have significant negative impacts. Now, from the agricultural input point of view, I was reading just a few studies recently which is indicating that increasing temperature can actually have a detrimental impact onto the efficacy of certain chemistries, particularly insecticides. So we've covered in one of the slides before that pest resistance to products is increasing. So if the temperature rises, if existing chemistries become less effective, then we're going to see growing instances of pest resistance. Now, there's obviously a number of other different areas where climate change can impact the global crop protection market. These can be increased salination of soils in low-lying coastal areas, such as like Southeast Asia. And there's also the impact of pest migrations. Couldn't get it out there. And so pest migrations, we might start seeing more tropical or relatively more tropical species of insects, disease, weed migrate northwards or southwards into more temperate areas. Although what I've talked about before is largely on the negative side, how will climate change be a bad factor towards the global crop protection market? There's one area which is likely to benefit the global crop protection market, and this is in the form of the higher latitude countries such as Northern Europe, Canada, and Russia. There's still significant permafrost areas up in these regions, up in like Siberia and far north Canada. So when the temperature rises, if the permafrost is going to retreat further north, this will mean there's greater potential area in order to grow crops on. So one of the positive factors here would be expanded areas for crop protection and hence more areas for pesticides to be applied. And I hope that answers the question.
Okay. And we have a second question that mentioned that in some slides you mentioned regulations and discussed products being banned and phased out. Do your forward-looking numbers take into consideration innovation as well?
Yeah, absolutely. So our product intelligence expert in IHS Markit keeps track of all the products which are undergoing the latter stages of research and development. Now, just by means of a definition, when we say the latter stages of research and development, these are molecules which we expect to be commercially available within the next 5-year period. And in 2021 alone, we expect there to be 15 new molecules coming to market. Key areas would include like nematicides, as well as some of the biological products. And we're also very bullish about some of the recently launched products, such as the diamides. So be that proflanilide or tetraniliprole. And despite some resistance issues, we're also bullish about the major diamides which have already been launched, such as your Cyazypyr and Rynaxypyr. Now, how do we take this into consideration when looking at our forward-looking statements? Well, simply due to adoption curves, we don't think necessarily it's going to be a significant contribution within the next 5 years, but it will help to balance the products which are being phased out and regulated. So the key benefit being the higher pricing point for proprietary products compared to generics. So as the market phases out more and more products, we might see a shift whereby IP and proprietary products start to make up the gulf between them and generics, which can have a positive factor on the industry. And again, I hope that helps to answer the question.
Well, that marks the end of the session. Thank you very much to our presenter and to all of you watching. Thank you very much, guys. Have a good day. Bye-bye.
Thank you.